Thanks very much. Nice to be talked about again. Great to be here, everyone. So Chalice, for those who have been following since our discovery in 2020, we've got the largest and the premier palladium nickel copper project in the West. And as most people know, it's just outside of Perth here in WA. So we also have a strategic non-binding MOU with Mitsubishi Corporation, as Andrew mentioned, one of the top tier Japanese trading houses. I guess the reason why this is being talked about so much now is this is quite a compelling and unique exposure in the market, and it is a counter-cyclical investment opportunity, and it matches, I guess palladium has a very strong macro thematic alignment with the Trump administration and those policies. And currently the stock is trading at about $18 per ounce of precious metals in the ground. So that's on an EV per resource ounce, and that actually excludes all our nickel, copper and cobalt as well. So it's incredibly cheap, put it that way. We also have a huge amount of upside in our license holding. I think a lot of people would be familiar with this, but we have 8,000 square kilometres of license along the western side of the Yilgarn Craton. It's a very exciting but very poorly explored part of WA, and we're exploring that as well in parallel as we take our flagship project Gonville through to production. We're in a very strong financial position as well, 90 million in cash and listed investments. That means we are fully funded all the way through to Gonville FID. We've got a very supportive, stable set of high net wealth and institutional shareholders on our register. So the strong financial position, the backing of institutions, all very important, but the balance sheet, particularly through lows in the commodity price cycle, is one of those critical factors. And pleasingly, we have seen a little bit of share price appreciation since our metallurgical update earlier this week, which I'll talk about. So quickly, why palladium? The blue line here is a chart of the palladium price in Australian dollars over the last 5 years or so. Basically, as I said at the beginning, the Trump policies and the push back against the growth of battery electric vehicles is going to be very, very good for palladium. So if you're seeing sort of vehicle growth numbers and sales at the moment, there is a resurgence of ICE vehicles and also hybrids, particularly plug-in electric hybrids, but also extended range electric vehicles, which both obviously have palladium-based catalytic converters. So the price has been very, very weak, as you can see there, since mid-22, but we think it's hit a floor now around about $950 to $1,000 an ounce. So you can see there it's just been trundling along at that sort of level for the last year or so, and we think it's poised for a recovery. And you can see when the palladium price runs, there is very, very few ways to play that on the ASX, and really our project is the only sort of major project of significance in a reliable, safe part of the world. So I mentioned this, I guess the death of the internal combustion engine I think was a bit prematurely called. Obviously, you know, palladium demand actually continues to grow, which is not reflected in sort of the consensus forecast based on, you know, very, very rapid battery electric vehicle growth. What we've seen in the last few years is really a slowing of that growth and a repealing of incentives that were pushing people and subsidising that sector, pushing consumers into that space. So we're seeing much, much more hybrid production, and obviously hybrid EVs, like I said, contain an internal combustion engine, therefore they contain palladium. So basically our view is that the consensus view on palladium is completely wrong. Supply as well is the interesting part of palladium. As you can see on the left-hand side, it all comes from essentially Russia and South Africa, a tiny little bit from North America. North American operations are really underwater, struggling at the moment. So in short, this is a metal that is reliant on these very, very fragile, old, aging mines that are precariously hanging on through this low point in the cycle. The South African sector in particular has underspent about $18 billion worth of sustaining capital in the last decade. So by stripping their mines of capital, that doesn't mean they sustain production in the long term. So what you do see is a rapid decline of production over the long term. So the timing is good for a new greenfield project like ours to come on. So our project, I mentioned just outside of Perth here, it's a tier 1 scale. It's a sulfide project, a nickel sulfide, orthomagmatic sulfide asset, very rich in PGEs, particularly palladium, but it has a very unique revenue mix, mostly palladium, as it says there, about 50%, 20% from each of nickel and copper as well. So it does have good exposure to those metals markets as well, which are obviously at low points. We expect the asset to be very, very cost competitive. It was always going to be a second quartile asset. It's just gotten even better with our update earlier this week. We've de-risked it substantially by acquiring the farmland that occupies obviously the resource area, but also the surrounding infrastructure we need. It starts at surface, so it is simple open pit mining, and we've now got a very simple, straightforward, low-cost, industry standard flow sheet, which I'll get to. So various things on this page. Effectively, we have been very busy, although we've been a little bit quiet in terms of marketing through the low point in the price cycle. We have been absolutely razor focused on this project. We've hit a number of major milestones, as it's listed there, around drilling it out in its entirety to an indicated category down to 450 metres. There's no further infill drilling to do. We are just into engineering and optimisations now. We've acquired the farmland. We've got the team in place. We've got a new COO, which we're very excited about. He's going to start in next month. We've also got all the internal roles secured. The flow sheet now, as I mentioned, very much simplified, and that has been a real breakthrough. The coming sort of 2 years is all about securing the other infrastructure, securing offtake agreements, all our regulatory approvals, which we're well advanced on, and then obviously progressions into financing this project to go into a FID, which is targeted in 2027. So what was all the commotion about earlier this week? Effectively, we'd always had a lot of challenges with the nickel side of our flow sheet. So we historically, over the last 3 years, weren't able to hit a saleable concentrate grade on the nickel for the low grade portion of the resource. But now we've confirmed we can make saleable concentrates across the entire spectrum of grade. So that has been a huge breakthrough. It means that we do not need a big, expensive downstream or midstream process for the nickel. So that takes a huge amount of cost out in terms of capital and operating costs. We do take a slight downward revision on recoveries, but we're still in a very, very good overall recovery of the circuit. We expect to be very, very good, like I said. So an overwhelming simplification, a simple concentrator to process the sulfide material, and then a blend of oxide and sulfide material will go into a standard CIL plant, very much gold industry standard fare. So this is the impact of what we announced. Essentially, the bottom line there is margins are going up. So it is a big decrease in complexity risk. We're all using all standard technology. Like I said, we do take a small downwards cut on recoveries and payabilities, but that is overwhelmingly outweighed by reductions in both capital and operating costs. So this will all be finalised into a pre-feasibility study in the middle of this year, but the market pleasingly has seen how substantial this breakthrough is for this project in terms of getting it built. And as most people would know, I mentioned at the beginning, there's no further drilling to be done on this deposit. It is one single tier 1 scale open pit deposit. Resource, as I said, starts at surface, and one of the critical factors of this, whilst it is a low-grade deposit in its entirety, it has some very, very rich high-grade material near surface that we intersected very early on, and that really enhances the early years of the mine plan and shortens our payback period. So it is almost a tale of two halves, a first 4 or 5 year period of very, very attractive economics, moving into a long-term bulk style of operation that's going to be a multi-generational type of open pit operation. And that's what drives the competitiveness of the asset. This is data from 2023, where we thought we were going to be sitting easily in the second quartile, around about $470 an ounce all-in sustaining costs for the the 15 million tonne per annum option we outlined. Now we've made those flow sheet optimisations. We're going down and to the left even further. We'll be knocking on the door there of the Russians. Obviously, they have a 70-year, globally significant operation there. That is also a precarious operation in that it's in the Arctic Circle, built on permafrost, getting very, very deep as well. So you can see just how sort of tricky this metal is in terms of supply. On the right-hand side, that is predominantly South African, Zimbabwean operations, likewise 50 plus years old at depths of 1,500 metres to 2 kilometres down, getting very, very expensive and getting very, very tricky to maintain. So we've got effectively most of the fourth quartile and most of the third quartile underwater at current prices. So we do expect, eventually the market will come back into balance and we will revert back to incentive pricing levels before long. So Gonville as well has recognition from government. So those who think that the project's not going to get approved or not going to get through the regulatory permitting process, I would challenge you on that to say the state government and federal government is overwhelmingly supportive of assets like this, given the criticality of the metals, but given the rarity of projects like this in terms of scale, they are overwhelmingly going to, support this project to get into production, and it will be one of those iconic mining operations of WA in due course. So this is an Explorers conference though, so we shouldn't forget that Chalice is one of the most active and also one of the most aggressive greenfield frontier explorers in the space as well. Whilst we've got a fantastic, discovery in the portfolio as well, we have never lost the hunger for that next one. And so our business is premised on finding these giant, unrecognised deposits in new areas. And really all the focus is on the West Yilgarn, so the western side of the Yilgarn Craton. We've started really drilling after a couple of years of really doing all the groundwork, airborne surveys, ground geophysics, soil sampling. We've vectored in now on over 40 targets in the western part of the Yilgarn. We've just gone and drilled 7 of those, and we've already had sufficient encouragement. They're going back to drill further on a couple of those. So we really, this is also the sleeper in the Chalice portfolio, but we do think it's only a matter of time before another discovery comes out of our work here. What's really exciting us internally, as we said, sort of in the third quarter last year, the Barra region, it's about 300 kilometres north of Gonville. It's sort of east of Geraldton. It's a completely unrecognised series of greenstones, so very, very analogous to the Eastern Goldfields, completely undrilled. So we've drilled the first set of air core holes now at that research target, as well as a couple of others there, and we've hit and confirmed that this is greenstone geology, so therefore prospective for big gold systems, but also hydrothermal copper gold systems like Boddington. So this is a space to watch. Like I said, we are back out there drilling in the next couple of weeks to follow up on those last holes. So definitely watch this space. In terms of the forward plan, I mentioned, what's happening at Gonville. I mentioned sort of where we're drilling at the moment regionally. There's lots to look forward to here, and really it is such a unique exposure. If you're thinking that the battery electric story is getting a little bit weak, palladium is really a metal of interest that you should look at, and Chalice is really the premier exposure to that recovery. So the palladium price recovery is obviously number one, but our PFS mid this year, our approvals all on track, and like I said, very, very active, which hard to know when the next discovery will be made, but we're certainly head down focused on, and we've got such a large land package that we think it is one of the premier exploration opportunities anywhere in the state. So thank you very much.